Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at a SPAC that is taking Topps playing cards public. I'll kind of give you my take on it, what I think is going to happen. We'll take a look at the investor presentation and we'll see what we think. So let's not waste any time. Let's jump right in. Alright guys, before we get started today, subscribe to the channel. Hit that bell notification so you can stay up to date. I try to post new videos every day with like growth stocks, penny stocks, new SPACs, anything I think can help us grow our portfolios, become better investors. There is a link down in the description to my Patreon account. Come join the family. I did the first 50 patrons for just $1. That's the day one squad right there. I think we've got, under 10 spots left. You'll get access to the private Discord where we talk stocks, links to 4 different portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send out a notification, or I enter a swing trade or a crypto trade. I send that out so you can follow along. So if you want to help me grow the channel, you want to be a part of the family, you want to be the day one squad, ultimately come join us. We would love to have you, and I really appreciate it. I do want to say real quick, thank you so much to my current patrons, my current subscribers. I love you more than anything. Growing the channel with you is amazing. So thank you guys. Let's not waste time. Let's jump in. Okay, so I was a big baseball kid growing up. I played baseball ever since I was 5 all the way up until I got out of high school. Baseball cards, playing cards, basketball cards, I had them all. I had a stack of them this tall. Honestly, I think I'm pretty sure I still have them in in my book, somewhere packed away in the closet. Then we had the Pokemon cards and the Yu-Gi-Oh cards and all. I didn't really get into Yu-Gi-Oh, but Pokemon was my jam. But I want to take a look at this SPAC that's taking Topps playing cards public and kind of see what we think about it. See if it's worth our investment, see if it's worth our time. It's been getting some exposure, it's been doing well, but let's take a deep dive and see what we think. I'm going to hit the key points, but I will link the investor presentation below so you can look at it more in depth. I think the biggest thing here, guys, is finding out if it's a feasible investment. Like, is it worth our time to invest in it? Is it going to go up? So we'll take a look. Let's jump in. Okay, so this right here is their website. This is Topps Playing Cards. It's an iconic company. Everybody knows who this company is. They're doing more than just playing cards, though. They've got quite a bit of business segments that is kind of appealing. This company was taken private in 2007 for like $385 million. And I think that they were being led by like the former CEO of Disney. I'm not quite sure on that. But now they're going public in a SPAC deal for like 1.3 billion. So just a massive valuation over when they went private back in 2007. The reason why I wanted to cover this is not only did I love baseball growing up and I loved playing cards growing up, but in 2020, during the pandemic, it created a whole new craze for playing cards. Now, is that a one-time big boom blow up and then it's going to die off, and that's exactly what it is a one-time thing? Or has it brought so much more light to the company and to the products and to trading cards that it's going to continue on? We'll have to take a look and kind of see what we think. But I do want to say the US sports memorabilia market is worth about $5.4 billion annually. So it's a big market. You can see, like I was saying, you can see, they do more than just baseball cards. What I liked, though, is if we look down here, let's see, they've got WWE and, Star Wars and all that, but they have this NFT thing that's got, and then they have apps where people can join and play together and trade together with digital cards. There was something on here about NFTs. Did I miss it? Let's look here. Yeah, right here. So available on March 20th, the NFT digital collection or collectibles comes available. The NFT craze is going insane right now, guys, on the blockchain technology where, they certify, digital things, makes them super valuable. It's kind of a insane thing, but these guys could get a big boost from that. So let's take a look at the investor presentation. So right now they've got 4 segments of their business, right? They've got the physical memorabilia. So, playing cards, jerseys, merchandise, anything that's physical. And they've got, these are some of their big brands here: Formula One, baseball, Star Wars. Iconic portfolio of trading cards, stickers, and curated experiences, including e-commerce platform. Then they've got digital. So they've got interactive apps creating communities of users who collect, trade, and play online. Then they've got gift cards, which is 4% of their revenue, digital 6%, and physicals 55%. So global gifting, payment solutions for leading consumer-centric tech companies. And then they've got confection. So, and these are big brands here: Ring Pop, Bazooka, Bottle Pop, Push Pop, Juicy Drop. When I played baseball, everybody used to call me Juice Box, because I love juice. So you probably didn't know that. Now you do. So I was actually going to name the channel originally the Juice Box Show, but we came on this just in. Okay, guys, so check this out. This is how insane the playing card industry has gotten lately. A Mickey Mantle rookie card sells for $5.2 million, crushing the Mike Trout record. Mike Trout trading card sells for almost $4 million. Breaks record set by Honus Wager card. Let's see here. Yeah, I mean, it's insane. Wayne Gretzky card reaches 1 million. Kobe Bryant rookie card in pristine condition sells for 1.8 million at auction. So obviously, guys, the playing card industry is getting bigger. In 2020, it blew up. They're selling for absurd amounts of money. You can go and buy playing cards at yard sales or, anywhere, and it's kind of like a gamble. That's one thing that I think is helping the whole craze right now is you buy a pack of trading cards for maybe $20, right? Say you buy a brand new pack from the store. Well, you could potentially turn that into thousands of dollars, depending on, what cards you get. If you get a card in there that's, a super rare card, or you're at a yard sale and there's a big box of cards and you pay, $50 for them, you could go through them and potentially find a thousands of dollars, card, $10,000 card. You just never know. So I think that helps with the, the excitement behind it, is that gambling feel. If we take a look here, this kind of gives you an idea of strategic licensing. So guys, one thing I do want to say is they've got the opportunity here for a couple of different segments. So they kind of really shifted their business model back when they originally were just focusing on playing cards, to licensing deals and a lot of these other segments like e-commerce apps and payments, which is going to help them diversify their revenue and create additional revenue streams. You can see here, they started with the MLB back in 1951. Now they have the exclusive license with the MLB, so they are the only ones that can make the playing cards that have the photographs and the team logo. Panini is their direct competitor. I actually like Panini a lot. They do the basketball cards. They do all types of cards, but basketball is like their big one. They can make baseball cards as well, but they can only airbrush the logo on. They can't put the official logos. So there's a little bit of kind of gray area there when it comes to direct licensing. You can see here a diversified portfolio of product offerings and price points. So they've got cards as cheap as $1 all the way up to 25 grand for, real collectors, high-end enthusiasts. I'm going to skim through a lot of this stuff. The print on demand part of the business is pretty cool. You can get posters, or whatever, t-shirts with your favorite players on them. Look at this e-commerce revenue jump, less than 5 million in full year 2015, up to 92 million in full year 2020. That's massive growth there, from e-commerce sales. The one thing I did want to talk about is case breaking. Guys, one thing that this company can do, Topps can do, that a lot of other companies can't, is they can increase their prices while also increasing their production. Most companies can only choose one or the other. It's hard to choose both. The reason why they can do that is because of these unboxing things, these group breaking or case breaking events. So what'll typically happen, what that means is, so say I buy a big case of baseball cards, and say there's 30 teams in the MLB. And so 30 people can say, I want the Angels, the Dodgers, the the Giants, whatever it is, and I will then break the case open, and any Giants cards, any Angels cards, any Dodgers cards, I will give those to those additional people. And the rising prices in these cards, it's like collectors are accepting it. They're okay with it. And so the ability for them to be able to continuously grow prices, but will also, help them increase production is great for the top line. Now, they can also do case breaking randomly. Like you can just say, there's multiple different ways to case break. You can do it by team, you can do it by player, you can do it randomly. They'll use random generators to just divvy out different teams to different people. So this unboxing trend, this case breaking events gives them a great opportunity to do exactly what I just said: increase prices, increase production. They've got a lot of different things moving on. Like I said, the apps. These are kind of their key growth areas, is international expansion. So expanding out in Japan, Switzerland, Russia, Poland, Korea, Austria, China. New international sports licenses targeted further penetration of core markets worldwide. Guys, with the whole sports betting, online gambling craze, what this is essentially doing is it's almost creating another asset class for people to invest in. So it's kind of evolved into this thing where it's almost more of like an investment now versus just a hobby or a commodity. It's people can invest in these playing cards because they're an increasing asset class. They can go up in value if they are buying the right assets. Just like anything, you invest in stocks, you got to buy the right stocks for your money to go up. Real estate, all of that. So this market is evolving. The licensing, I like that. They can go out and license with these different companies. They can really start to narrow down their growth areas so that they can continuously increase revenue. Right here, this the ecosystem of branded apps, they call it. They've got all these different apps. I'm a huge Marvel nerd. Like and DC. I'm a superhero nerd. I love superheroes. So you can see here where the younger generation, they've on their phones, they can jump on, get on these apps, they can trade, they can play, free to play experiences, enter contests, win prizes, connect with other fans. You can trade virtual cards. Cool stuff, cool stuff there. This talks more about the platform. Here we go, NFT. So the NFT is where I think can give them a short-term, real quick boost in the short term. The NFT craze is going insane. I don't know if you guys have been watching Playboy. I sent that out as a notification a week back in the Discord. Been doing really well. One of the main reasons they're blowing up right now, they're doing so well, is because of the NFT announcement they made. The CEO came out and said that they are going to partner with an NFT company because they've got an endless portfolio of things that they can NFT certify, just like Topps does. Topps can certify cards and for all these different industries, different sports, different Star Wars and Avengers and all these different things. So well positioned from digital innovation, history, people, process, systems organized to build a comprehensive collectible business on blockchain. They've got unique content, heritage, talent access, transparent. The NFT is something that I really like about them. I think it gives them some great opportunity, moving forward. Let's see. This is kind of their payment, part of the business. We won't go too far in depth on that. Again, this is their confection, their edible products, which, isn't a huge percent of their revenue, but it is bigger than, some of the other areas like the payments. Now let's look at the revenue. Guys, again, I just wanted to skim through this, kind of, give you the key points. Look at the revenue. We'll look at the chart. I'll give you my overall thoughts on it, and we'll wrap it up. Okay, so you can see in 2019, they did 460 million. Jumped that by 23% in 2020 to 567 million. Jumping it again by 22% in 21, projected to do 692 million. And then jumping it by 12% to 2022 to 777 million. Now, the adjusted EBITDA, it looks like I did see something in here that shows that they're actually going to lose money in 2021. Their net income, net revenue is going to be worse in 2021 than it was in 2020. So let's see the adjusted EBITDA, 51 million in 2019 to 92 million in 2020. That's a nice jump there. only jumping to 105 million in 2021, and then 115 million in 2022, projected. Capital expenditures, 2 million in 2019 down to 1 million in 2020, 5 million in 2021, and 5 million in 2022. The capital expenditures there, they've got to make acquisitions. They've got to, spend money to make money, essentially. Now, if they can lower their cash burn, that's going to help out, obviously. This kind of gives you a breakdown of the different, segments and their revenue from it. You can see confections makes up a decent part of their revenue, where physical obviously makes up the biggest percentage, and then digital, apps and things like that and gift cards make up the smallest percentage, but their compounded annual growth rate was the biggest. So it makes up the smallest percentage of their revenue, but the compounded annual growth rate was the biggest, which makes sense, obviously, because, when you've got a smaller number, it's a lot easier to grow it by 40% than it is to grow 450 million by 40%. So it makes sense, but I do like to see that they are increasing their digital, revenue. I do like to see that because that kind of plays hand in hand with the NFTs. So, they're projecting to go from, 24 million 31 million for digital in 2020 to 41 million, then to 51 million. Now, with the NFT thing, I don't know exactly how much that's going to affect their revenue. I would think it would be more for hype, to create more exposure, more excitement around it than anything. Down here, this is what I was talking about. You can see here, so their adjusted margin percentage is actually going down in 2021 and 2022 versus 2020. And so that kind of makes me nervous a little bit because of the one-time boom in 2020. Is that what it was? Is just kind of a one-time boom rather than a consistent growth model moving forward? That was my big concern with the Beachbody SPAC, is were their numbers so inflated in 2020 because the pent-up demand for at-home workouts? Similar type concern here. I think overall, guys, the biggest risk with this company is them losing their license with the MLB. If they lose their exclusive license with the MLB, that's going to kill them. Panini produces basketball cards. Basketball just became the second most watched sport in 2018. So there's more demand for basketball cards than there is baseball cards. I've seen where people will wait outside for days on end outside of Target to get their hands on basketball cards, where nobody's really doing that for baseball cards. So I do think that there is some strict competition right there with Panini and basketball cards and baseball cards. Now, do I think it's a big enough separation? No, I don't think it's that big of an issue, because I think they've got such a strong brand built up. They've got such a reputation. Baseball cards are obviously popular, but they've also got all these other types of cards that I think they will stay around and do well for years to come. I don't think it's something that is just going to kill them, because basketball is a little bit more popular right now. The other thing is the other risk would be if collectors just start pushing back on rising prices. If they get to that point where that magic number comes, right? So it finally hits that point where they're like, no, that's too much, and they start pushing back. That can be a risk there. Again, and then is the growth sustainable from 2020? Is the craze going to die out in the coming years? So those are my concerns with it. Overall, I do think it's exciting. I think it is something that can do well. I don't own the stock right now. As you can see here, it came out, gapped up, got up around the $11 mark, ran up to, $11.75, came down, gapped up a few times here, and it got all the way up to a high of $14.15. Currently sitting at $13.82. It's down about 2% today. I would wait on this stock. I think you could get some preemptory run, coming up to the merger. If they come out and announce more NFT stuff, you could get some pop. I would rather wait until it gets back down around this, $12 mark. It looks like you might have some support there. But ultimately, you don't want to, get in at 14 and then see it come back down here and fill these gaps. Again, guys, I would say throw this on your watch list. You know, keep an eye on it. See if you can get it to pull back. Even down here around the 1266, you might run into some support. But I think overall, the $14, $15 mark's just a little bit too high for me. It looks a little overpriced. You know, I think if you get in around 11, 12.30, it would look a lot better for me. But I do think that this company will get some catalysts in the future, you know, depending on how the NFT goes and how baseball card demand goes. They could do well. I think this is a stock that it's a company that has been doing it for so long. You know, they've been around. They have a reputation. Overall, I think it could do well. I don't own it. I'm not going to buy it as of right now. It's not the top on my list, but I just wanted to bring you an update, kind of show you what I thought. I do think they've got a lot of potential. I do think the stock can do well, but I'm going to wait, try to find a better entry. If it does get around the, you know, $10, $11 range, you know, maybe low 12s, I might, you know, buy a couple tracer shares just to kind of throw them on so I can watch it a little bit closer, and then depending on what happens, you know, I'll make my further decision from there. But guys, there is risk with it. I do think there's opportunity here. Just wanted to bring you my thoughts on it. I am not a licensed stockbroker. This video is for entertainment purposes only. Always do your own research and due diligence. Don't just take my word for it. You know, I think we're in a market right now where buyers are demanding more and more value. They're not just buying anything that looks halfway decent. So that's why I'm saying, you know, I would wait a little bit, you know, try to find a better entry overall. Long term, I think the stock could do well. You know, just at this moment in time, I do think that up there around the 14, 15 is a little bit too overpriced for me. But yeah, that's it, guys. You know, if you've got a price target on it, put it down in the comments. I'd love to hear about it. You know, come join us at the Patreon. I'd love to have you over there. Love to talk stocks with you. Like the video if you get any value out of it, and I'll see you guys in the next one. Peace.